Hi, Jonathan York from Bay Financial Partners, looking at investment markets. In the end, we sort of escaped October reasonably unscathed, really, and the markets performed pretty well, certainly on the equity side, with markets trading up towards month end and really looking as though they could push on towards the end of the year now. That'll really make the next unemployment data from the US really key now, as the latest sort of indications from the Fed was that potentially they could be looking at increasing rates in December. Now remember, that is the last meeting now of this year, and the Fed has really made it pretty clear they wanted to try and increase rates if the data allowed it. So that unemployment data coming out now in the next couple of days will be really key to that rate decision from the Fed. Earnings were still pretty good in the US. Certainly some pretty sort of standout performances. Especially from Apple. Their performance really was very good, and really still showed a growing market share in China as well. Which we tend to think that the Chinese consumer is slowing down, but certainly not according to Apple's data. And certainly their sales were still sort of holding up and actually increasing in the Chinese market. In terms of China, the Premier's come out now, so they're looking for around 6.5% GDP growth for the next 5 years. So that's down a little bit, and it's certainly below that 7%. But still, if you've got 6.5 for the next 5 years, that is still growing at least double the rate of most Western economies. At least double there. In some cases, it's 3 times. Here in the New Zealand market, no surprise, the Reserve Bank left rates unchanged, and just a little bit of tweaking to the sort of commentary there as well, in terms of taking into account the data. The Auckland housing market, which is still really pushing on at quite a phenomenal rate. The average house price in Auckland now is over $900,000. So just on the back of that data, your feeling is now is probably that rates are still on hold here in New Zealand, although the latest dairy auction was down a little bit. That has been a pretty volatile series over the last sort of 4 to 5 months. That was down a little bit, and that puts just a little bit more pressure on the Reserve Bank. But I say when you weigh that up against the rising Auckland housing market, and that's starting to spread down through the sort of regions now as well. With really pretty low rates and low mortgage rates, it's not likely to abate anytime soon. A couple of bond offers out there. There's the Infratel, and there's also an Auckland airport bond issue. If you are interested in those, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. But as discussed here many times, there are other options out there. Those bonds are offering around sort of 4.25 to 4.5% as a fixed sort of yield for the next maybe sort of 6-7 years, 8 years in some cases. There are some pretty good options out there with dividends. Some of these shares are providing some pretty good dividend returns, around sort of 8, 9 or 10%, with a pretty blue chip companies out there as well. So if you're interested in those, I say there's lots of income options out there. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.